Welcome, everybody. We are in the month of May, and judging by my haircut, at least, it's quite apparent that we are in the midst of the pandemic. And a lot of people are now reconsidering, investors specifically, reconsidering their portfolios. They're looking around, trying to see what the opportunities are, and also refocusing with the main intention to minimize their losses. Also, there's a bunch of new investors looking to explore the real estate market with what's happening with it, try to make a small fortune in the next little while. So in this podcast, we're going to cover a few questions related to investing into real estate, and whether you're thinking about buying a commercial property or residential property, whether you're thinking about using private money or bank money, whether you're thinking about buying and reselling right away or actually investing for a long haul, we're going to answer those questions. We're going to talk about some more issues that are very relevant and important for people that are thinking about investing into real estate, whether they're seasoned professionals in investment or they're just starting out. And we have a great group of people here with us as well. Today, we're talking with Mike Yosher. He's the director of private lending at Integrity Tree Financial. This is a financial advisory firm in Toronto. And we have my dear partner, Mitra, with whom we've been working within the real estate world for the past 5.5 years. So guys, welcome. And why don't we go around and just quickly introduce ourselves so the folks that are listening in know who we are and what we're about.
Sure, thanks, Vlad. So before I went independent, I spent the first part of my career with the big 5 banks, working as a mortgage advisor and providing residential funding solutions. Since then, when joining the firm, what we do is we help people anywhere from large institutional loans for construction financing of, say, a $23 million loan to a private land syndication for 15 or 16 million bucks, down to smaller loans, which are in the few hundreds of thousands range, be it private or institutional. I mean, the main thing that I really focus on when helping investors is really work on their goals and where they want to be as an investor. So whether some of my clients are starting out with a property or two to some that have a larger portfolio with multiple properties, we provide the solution for you, whether it's commercial or private or institutional. So there's definitely lots of options. And I also speak from experience. I drink my own Kool-Aid, so to speak, and that I am an investor myself as well. And I love the real estate field and I love investing in it. So that's why I'm here. Thanks for having me, Vlad.
Thank you. Thank you. And by the way, Mike, you look like a plane in mid-flight because the light on one of your headphones is blinking all the time.
Oh, I see. Right. We're getting ready for landing.
Okay.
Thanks for noticing.
And you're outstanding for what you do, Mike.
Yeah, absolutely. We have both Mitra and I have long personal experience with Mike in terms of doing our personal transactions with him. And also, we've recommended him on so many occasions to our clients, 100% success rate.
Yeah, very happy.
Thanks, guys.
So for me, I have been in people business, in service industry for the last 3 decades of my life. I moved to Canada in 1998, and since 2000, I've been in the housing industry. I started to work at Canada Mortgage and Housing Corporation in different capacities, from mortgage-backed securities to business development, and then switched to AIG United Guarantee, where I was the mortgage underwriter, multilingual mortgage underwriter, and then very smooth transition to real estate sales since 2008, when I started actively selling homes, helping buyers, sellers, renters to make their move.
And in the past 5.5 years, we've been working together very, very closely on everything that has to do with real estate within our little world. So,
and I have been blessed to have a partner that he's great at really being a great company.
Thank you. So for me, I started my professional career in software development 26 years ago. Progressed to a team lead, worked for a number of investment banks or investment institutions and investment banks in New York. Moved to Canada, worked within the healthcare industry, rather. And since 2004, I was running a totally different business. It had to do with mining. It was a mining business. I was both a partner in the business and I was very active in terms of, actually throughout my career, I was very active in financial modeling. That was one of the important aspects of my work, putting together the financials for the companies that we were entertaining. And later, when I transferred over to real estate, that remained to be the case. I'm looking at properties, I'm analyzing the properties, and financial analysis is a big part and has always been a big part of what I've done in the past. I'm also very passionate about real estate, and we have a great group of people that we work with. Two of my close associates are actually present on this podcast as well. So,
Thank you.
guys, to kick things off, wanted to start with more of a general question. What are the advantages from everyone's perspective here within this group for investing into real estate?
For myself, really, what I love about it is a couple things. One is I like the direct control and influence that I have over the investment and some of the options that are available with it. And two, I just like the snowball effect that you see over the long term. You know, you plant the seed and you wait for it to grow, and over time you definitely reap the results. So those are the main things that I like about it. I mean, obviously there's other things like leverage and tax benefits, and we'll get into all of those. But the big two for me that stick out in my mind is just the control and the direct influence I have on the investment, and the compounding effect that happens over time. You know, for me. How about you, Mitra? What's your take on why you like real estate?
I actually second what you said. For me, also the fact that it's very tangible, and that is what I know best from my childhood. Of course, I've been exposed to family members that were banking lands for over 2, 3, 4 decades, and then creating a lot of opportunities and leveraging. And also, I love the fact that there is a variety of things you can do within real estate investment. It is from purchasing a condo to a freehold, or from a residential to commercial, or from a single family home to multi-unit family homes. So it's never boring. There are so many options that you can just work with.
Yeah, and also definitely in terms of the familiarity of an average person with real estate investment versus a stock market investment, for instance, both strategies and technical aspects of either one, it seems to be a lot simpler. And in fact, it is the case. Everybody's familiar with the general process of put in a down payment, obtain a mortgage for the remainder of the purchase price, and off you go. So it's a very straightforward process, whether you're buying residential or commercial. On top of that, it provides an opportunity for you to, quote unquote, force appreciate the property, right? If you're hands-on, you can go and finish the basement. You can work on your bathrooms. You can remodel the kitchen. You can hire somebody to do that. And you know that for every dollar that you spend, it will bring you 30 to 70 cents in return when you're selling the property. So you can just force appreciation of your investment asset, right?
Sure.
So that's one of the important benefits as well. Also, you guys would probably agree, real estate markets are generally more stable. In other words, they have less volatility, a lot less volatility than stock markets. They don't fluctuate on a daily basis or on an hourly basis. There's a great deal of inertia when somebody starts building a house or developing a project and they start digging for the foundation. The work has started. You can't just stop it. There's a lot of moving parts involved. So that's very important. And also, it's a leveraged investment. There are some options in creating leveraged investments in the stock world as well. Trading options, you could leverage that. Here, but that's a reasonably complicated instrument to trade. Here, it's very simple as well. You know, you put in, say, as little as 5% in Canada, and you get a loan for the remaining 95, right? So whatever growth you accumulate, that will be added on top of your original 5% investment. Tremendous leverage point.
Yeah, I mean, I just wanted to jump in there and say also with real estate, when you leverage with real estate versus leveraging within the stock market, you know, if the market takes a downturn, you could wake up on one fine morning and discover that, you know, a portion or a significant chunk of your portfolio has been sold, you know, as a trigger mechanism. Because if you borrowed money to buy stocks and the price of stocks has dropped, the institutions have a mechanism that just, you know, triggers a sell. That's not going to happen in the real estate world. You know, if the real estate market takes a downturn, it's not like the bank is going to go and sell your house from underneath your feet without even, telling you. Nor will that happen. I mean, so long as you're making your monthly payments and you're meeting your obligations, then that house remains, stable, and you're able to ride out the storm, so to speak. So that's the other thing
Right.
I like is the stability of the leverage. So it's not something that can, be taken away, in an instant.
Right. And
Yes.
there are two approaches that most people look into. It's buying and holding a property. We're not talking about complicated scenarios where you sell, you involved in land assemblies or land severance. We're talking about more or less straightforward real estate investments where you're buying a multi-residential or a single family home or a commercial building. Regardless of the type of that sort of purchase, is it better to buy and resell, buy, renovate, and resell right away? Or is it better to buy, maybe or maybe not renovate, and actually tenant the property and keep it for a long time?
I personally like buy and hold as the most, lucrative option for myself, simply because, if it's money, time, skills are the three important things. And I am not a renovator and I am not a builder. And I really want to make sure that with the money and time that I have, I would really invest in real estate in a way that I can spend some money for renovation, but leverage to residing, renting, and the short-term, long-term. Just that has been the best option for me, thinking of my retirement, that when I retire, there is a stream of income coming my way, and I don't need to worry about anything. And there is a time that if I want to rebuild, then I have that option as well to rebuild, or if I, for any reason, I want to sell it, I don't know, sometime down the road, that could be an option, but it's not really the mindset of buying, renovating, and flipping that has been in my mind throughout my investment opportunities that I had.
Yeah, I mean, for myself, I when I look back at the number of years I've been investing in the different properties that I've bought and sold over the years, I mean, I look at the flips, the rent to owns, the anything that was done for a shorter period of time, either under a year or even over a 2 or 3 year period, was more speculative in nature. And when I compare it to the properties I just simply bought and rented out and just sat on them and just let time and inflation do the work, I probably would have come out, further ahead or just as far ahead without a lot of the headaches and the running of doing it. Now, I'm not saying speculation is bad. There's definitely
Yes.
times in the market where it's applicable, but from my own personal experience and what I've seen, I definitely like the long-term hold and just let the compound effect take its roots.
So what happens with a lot of first-time investors is that actually trying to time the market. They think, okay, I'm going to buy this property that seems to be attractive right now. I'm going to renovate it over the next month. It turns out to be 6 months. I'm going to spend $50,000. Turns out to be $250,000 as they go through the reno. And then the market starts dropping and they cannot sell. So timing the market requires, first of all, an intimate knowledge of what's going on in the marketplace, which nobody has in reality. It's just that we're relying more of a real estate inertia, right? It's a slower market to become volatile or start dropping
There's
significantly.
lots of theories though, aren't there?
Yeah,
Mhm.
a ton for sure. And it requires a certain level of expertise. You got to have the knowledge of how the construction in general progresses, right? You need to have a crew. You need to have an architect. You need to have a designer. And you need to have a vision for what that final property going to look like and how much you're going to be able to sell it for. So if you feel that you have all that, you still have to be concerned with what's happening in the market, right? If the market is flat or declining, this is a terrible idea.
Yes. Even
But
if
if
the
it's,
market's improving, you
you're
never
still risking.
have
You're still
exactly.
risking, right? It's possible to make money, but you have to have a great deal of expertise in this. You're essentially becoming a builder. You're competing with the professional builders, right? And
Yeah,
you have to
when you
degree time the market.
Sure. I mean, when you're walking into a situation like you're describing and you're planning on, gutting a place or even doing just a very simple lipstick reno on a property to improve it, you have to take into consideration that what if things don't go exactly as planned? And when I say things, I really mean the market conditions, because we have no influence in the market. We have an influence on the property that we are dealing with. And so you have to look at your investment and make sure that, hey, if the market doesn't go my way, that I'm okay to sit on this for a while. I'm okay to rent it out,
Yes.
and the payments will take care of themselves. I mean, Misha, what do you think of that?
I actually think that it's not even the market. The property itself can bring headaches and concerns, or the team that you are
Yep.
hiring can create issues. So really, I completely agree with you, Mike. At any given moment, even if somebody is buying with the mindset of flipping it, they really need to keep that in mind. What if things go wrong? What if they cannot sell it within that time period? Are they having a second option, a backup plan?
There's a substantial upside on flipping, but the downside is huge as well, and people have to be cognizant of that. I would think that the best strategy would be to always plan out your purchase for 10 to 15 years. That's kind
Mhm.
of the holding period. But at the same time, if you feel like you will significantly improve the property by renovating, you'll be able to charge higher rents and you'll bring the property price up and you'll be able to refinance, right? And there's all sorts of additional mechanisms you can attract in terms of financing the property and renovating it that you will come out ahead. You'll be able to purchase the next one based on the money that you can extract from the property once it's redone and it's tenanted, etc. There's a lot of options if you decide to refinance, but um, I would urge everybody who's considering real estate investments not to be thinking about 6 to 8 month um, type time frames when they're thinking about an investment.
Yes, unless that is their business. We have seen, Vlad, renovators, that this is really the way they make money, and they have really built their team, and they have had some success, but that is the way they make money.
I agree. I think ultimately the point I guess that we're driving at is that everybody can succeed when they working on the fundamentals and investing long term, but only
Right.
pros will succeed when they're trying to flip
Yes,
properties, right? In
exactly.
essence. Okay.
Hmm.
Okay. Perfect. Now, um, we talked about in passing different options in terms of financing the property, extracting the money after the renovation, etc. So, wanted to bring up a part of the story where VTB is involved, vendor take back financing. How is that beneficial? And how can people take advantage of that? And also, what are the different financing models that are available for either residential or commercial properties? So, Mike, maybe you can speak to that a little bit.
Sure, sure. I mean, vendor financing typically is something that happens in commercial deals for the most part. It does happen in residential deals as well, but usually the banks are pretty good in providing leverage. I mean, the way the system is set up now is that you could buy a house to live in with as little as 5% down, but that little bit of equity still needs to come from your own pocket. A VTB comes into place when the institution is going to give you maybe 60, 65% loan to value or something to that effect. Or you can get higher leverage with a VTB if you have a private lender for a short-term solution. A vendor will happily step in because they have a vested interest to sell you the property for the most amount of money. And if you're able to negotiate a good deal with the vendor, it could be very advantageous because then you can keep some of the money in your own pocket, spend it on improving the property and repositioning it, for increased appreciation. And once you've repositioned the property, you can then decide, based on market conditions, should I sell and be a speculator, or should I hold on to this for a while and go to a bank, refinance, and pull all the money, back out, right? And that becomes, quite advantageous because then you're working with almost infinite returns if you've used very little of your own capital.
I agree.
Yeah.
If the vendor take back mortgage would be equivalent of private lending return, that could be
Yeah,
just a great option because in reality for a seller, they have also so many other options. If they have so much equity, then private lending is definitely an amazing way of having great return. And if a buyer is in need and they can just get the same, why not?
So, like one of the examples that would come to mind is that, say, someone is buying a commercial property that is vacant or partially vacant, and they anticipate an issue with the cash flow while they tenant the property, right? In this case, a VTB would provide a buffer of security for them to be able to continue with the payments, right?
right.
Or somebody who's buying a property and thinking about remodeling it without having to be liquid for the amounts required for the renos. They can use the VTB, renovate the home, refinance it, and pay off the VTB through refinancing with a conventional mortgage, right? So there's a ton of options that people you can utilize.
Absolutely. Mm-hmm.
Yeah.
I agree.
Okay. Perfect. So now we've talked about a few issues related to real estate investments, and I'm curious about the price points. What do you guys feel the best price points for purchases are if someone is investing into real estate? Again, I'm not talking about complicated deals, no land assemblies, no, building townhomes with 250 doors, something that everybody can relate to.
Right, because I was going to say that question is quite vast in how that applies. I mean, my own personal investing rule in terms of price points, because I went to hold for long term, is I want to make sure that the property can carry itself. So if I'm buying, in downtown Toronto, it's going to be it's a condo. It's going to be a certain price point versus if I'm buying, an hour to an hour and a half out of the city, it'll be a different price point. But what I'm essentially going to be looking at is just the numbers, where the numbers work, and so I'm not really married to a specific price point. I will add that price points that are more within the affordability of the masses is the ideal place to be, because that is where most of the buyers are going to be, and that to me is a more stable type of investment. If you're buying a $3 million property and there's an adjustment in the market, for instance, the higher end properties drop first, before anything.
Not to mention that there's just fewer people in the market to buy those types of properties as well.
Exactly. So yeah, no. So for me, it's just really a numbers game and keeping it within the realms of financing and affordability. What's your take on that, Mitra?
I agree, Mike. I agree with you, and really being blessed working with different investors or buyers, I do see that definitely affordability is a factor. I do see the level of risk that someone can take is a factor, or availability. So affordability, availability, and the risk tolerance has been really factors that I see people are paying attention to. We do have first-home buyers that they have a budget of below 500K, and that in itself creates a benchmark what they are looking for.
And probably most people, right? Most people in the marketplace are operating with numbers like you mentioned, Mitra, 500 to 700, perhaps $800,000, right? That's
yes.
what's within their reach.
Exactly. We do see some repeat home buyers, whether they are downsizing or thinking of increasing their portfolio of investment properties that are looking for below 500,000 is a very nice spot to be. You're taking less risks, and at the same time there are so many options in smaller towns that you can invest, if that would be one way to look at. We do also have some investors that they are very busy, they are very active professionals. And for them, what is important is really having investment properties that they can manage with ease. And the money is not that much of a concern. It could be anywhere between 500 to $1 million, so long as it covers its cost or have a 4% at least cap rate, they would be happy with, so long as it's easy. It's not creating extra headache for them. And we do have also builders, big investors, that money is not a concern, an issue at all, so long as they have the right land, the right development opportunity, they can actually put the money.
Create the value, sure.
Exactly, create a lot of value.
Yeah. And with what's happening around us right now, the world has changed in the past 8 weeks quite dramatically. Both because of the virus itself and also because of the actions that the governments all over the world have decided to take with respect to restrictions of movement, restriction on the distance, restrictions on socializing, and a lot of businesses have been shut down, either temporarily, permanently, etc. And that creates a huge weakness in the economy, which at the same time is an opportunity, at least for an investor. And when we're looking at the market environment right now, what do you guys feel the opportunities are that an investor that is looking into real estate as a primary investment vehicle can explore?
I'm actually amazed. Sorry, I just wanted to say that right now, based on what I see, I'm amazed how this market can be a problem for one and a great opportunity, as you said, for another, Vlad. In reality, when the April market was just published, when you look at the home price, the number of sales being dropped by 67%, what does it really tell us? When we see that the interest rate being really the lowest possible, what does it tell us? A very smart investor is going to think that if you are literally in a balanced market, there is lack of inventory, but low interest rate, and then there are still a lot of opportunities, and the prices, the average price is flat. When you look at it, the average price has not changed compared to 2019. And I was looking at market chart. We are almost at the same price that we were in 2016 with all the ups and downs that we had. So in reality, isn't it an amazing time to invest in real estate, knowing that you do have the lowest interest rate possible? And then the prices are really great pricing that you can jump in and increase your portfolio.
Yeah. I mean, the other thing I wanted to say is that with the government stimulus and all the printing that's happening around the world, we're not going to see the effects of it now. There may be some opportunities where people may panic and want to offload inventory. But, as this money is getting, printed and going to stimulate the entire economy, circulates through the market by all the world banks, we're going to have some sort of inflationary pressure that's going to come into play. And, real estate's an inflationary sensitive asset, so just by that nature, you see that as a long-term support for, for the price growth of real estate. So long as we don't take a very kind of narrow, short-term approach and we look at this on a longer time frame, I still think it's a great time to get into the market. Mm-hmm. What are your thoughts on that, Vlad?
So for me, I to a degree, agree with you both. I think that it's almost a good time to invest in real estate. And there are some deals of people that are either financially unstable right now or just scared of the market that are very interested in offloading. And that is true for investors that have some sort of a portfolio. But it is also true for people that just reside in their primary residence in their primary home. So you can find deals there too, but it's still not, bless you.
Thank you.
This is still not the norm. And as we move deeper into the recession slash depression, things are going to be changing. The markets are going to be softening up. And, look at the example of Warren Buffett. He's not buying anything right now. He is absolutely confident that things are going to get worse. And I agree with that. This is just a blanket statement across all economies. Things are going to get worse in real estate as well. People will be more actively looking to sell, and that will create a drop in prices. Most brokers, when you interview them or you read about the interviews that are active in real estate, are extremely optimistic. They're talking about pent-up demand. They're talking about record low inventory. They're talking about multiple offers, etc. But again, we're in the very beginning of the recession cycle. Things are just starting to unfold. There's so much that is unknown in terms of what's going to happen with the jobs and the economy once it reopens. So it's time to start looking for opportunities, right? And be on the lookout consistently. But I don't believe that there's a lot of opportunities out there. You need people to help you find them.
Of course. At the same time, I think that it's very difficult to predict that, the market is going to really crash based on the April report. Don't you think that it's just a great place to be, that we are the market is held flat and steady and didn't have drop? We really don't know what's going to happen tomorrow. But if you are an investor, and that is what I learned from big investors, that they don't always think, okay, whether the market is going to even go further down. They are going to keep investing. And when they invest, they know that there are times that they might not be at the bottom of the bottom, but this is definitely a great time to build their portfolio. If they want to time it, then they might lose it.
We're going back to the point that we've discussed just a few minutes ago, right? Don't try to time the market. You're absolutely right. Just work with the market fundamentals. Have a time frame of 10 to 15 years or perhaps longer when you're planning your real estate investments, right?
Yes.
Okay.
Absolutely.
So, guys, we want to wrap up for this session. And just a quick note in the end that we're here to help you. We will be able to find you off-market properties, which oftentimes are a great buy. That is true for expired properties, for sale by owner properties, private sales of businesses as well, people that are in distress, life event sales, relocations. We'll help you analyze the property because, again, this is one of the things that we do for ourselves and for our clients. We'll look into all the financials and we make projections in terms of the yield. We make recommendations on what would and wouldn't work. We're very cautious at looking at the potential downside and evaluating that as well, because people have a tendency in general to be very optimistic when investing, and they are primarily looking at the upside of the investment and not concerned with what might happen if things go wrong. We'll help you with that process as well. And we'll help you manage anything and everything to do with the money supply, because you have to finance the property, and we'll lay out all the options that are available for you today on the table for you so you can make the most sound decision for your investment that you're contemplating. I wanted to say thank you. Thank you guys for participating. Mitra, Mike,
Thank you.
I think it was a great session. Anything that you would like to add before we wrap up?
No, that's it. I mean, thank you for having us, and great conversation. I always love chatting about the investment world.
Thanks, everybody.